We found the page, one page behind a metal file cabinet that started all the antenna, vibrating. What we discovered was that the husband, if you will, who owned the company, was living his entire life through the company, all his personal expenses, his trips, just everything, hundreds of thousands of dollars per year. And so the non-property spouse, the wife in this case, ended up with $12 million that he was trying to withhold from her for a long time.
I'm Rachel Green, divorce mediator and collaborative attorney. Join me as I chat about everything from smoothly navigating your way through divorce to prenups, all the while keeping the kids in mind. Hi, I'm Rachel Green. Welcome to Keep the Kids in Mind, a podcast where we talk about different aspects of separation, divorce, and restructuring of families. I'm very happy this morning to have Stephen Linker joining me. Steve is a very experienced forensic accountant and works on valuing assets in divorce. And he has many initials after his name. He's a CPA, a CVA, a CFF, an FACFEI. A very experienced and well-trained professional. And I'm thrilled that he's able to join us today. Welcome, Steve.
Thanks so much for inviting me. It's a pleasure.
So just to start, I know that you've worked in the family and divorce arena with many different couples. What drew you to this work? How did you end up getting into this strange profession where we're working with families who are going through such difficult times?
The complete story should take less than a minute. So I'm going to start from the beginning, though. My father was an accountant. When I was 5 years old, I wanted to be an accountant, even though I didn't know what an accountant was. When I was 10, he started taking me to clients because he knew I was great in math and people liked me and I liked them back. And when I entered college, my mother wanted me to be a lawyer, and I said, no, I'm going to be a CPA. And so I never had to choose, really. It was just destined that that's what I was going to always be.
You just started at 5.
Yeah, I started at 5.
And was it just wanting to follow in your father's footsteps, or you liked math? And
well, I think at first it was to follow what he was doing. Interestingly enough, I had a traditional accounting practice as a CPA for 10 years after graduating college and working with a large international accounting firm. Then I went on my own, had my traditional practice. But then 42 years ago, I decided that I received a phone call from an attorney who asked me to do a business appraisal for one of his divorcing clients. And I said yes, not knowing much about what to do, but I did my homework, and it was a smashing success. And I enjoyed it so much. That was the beginning right then in 1982. And 40 years later, I've performed well over almost 2,000 valuations and solved many other problems in divorce.
So is it mostly businesses that you're asked to value, or are there other kinds of assets as well?
Initially, it was always businesses, privately owned businesses owned by one of the spouses or sometimes jointly by both spouses. But in the last 10 years, actually, I have been called upon to value other types of financial assets. So they're not businesses, but people have come to realize that I can do things that a lot of other people, professionals, can't do. Complicated calculations and the like. So, it's just, I guess you could call it a natural, and I discovered it a long time ago.
I'm working with someone now who has some, I guess it's an IRA, but he owned it before the marriage. And then he made contributions during the marriage, and he can't get the old statements. I mean, he has the balances for right when they got married, because he can get like a history of the balance, but he can't get the old statements to see exactly what assets are in it. So would you work on something like that?
The answer is yes, we can work on something like that because we look for whatever we can put our finger on to get us someplace. Sometimes you have to extrapolate. And so I would ask for his tax returns through the years. And perhaps that would at least give us the amount of contributions that he made, okay? And then we could do stock market research and perhaps figure out how things increased over the particular years, attempt and come close to an estimate of the premarital separate property, and then, estimate moving forward. So it becomes a matter of estimation. And sometimes let's just call it the adversarial spouse, may not be happy with my results, but I can certainly assure that person what we did was logical and impartial, and these are the conclusions we came to. And under some circumstances, I could develop alternative scenarios that may be logical to that person, even though they come to the same result. So it's an interesting challenge that we face sometimes.
But we won't call it the adversarial spouse, because I don't do adversarial work. I only work as mediator or a collaborative attorney. So we're all on the same page, trying to find the truth, trying to figure out what's fair, so that we can all sleep at night and we don't have to think about our divorce and wince when we think about how we behaved 2 years ago or whenever it was.
I'm glad you said that, because when I said adversarial spouse, I actually was not referring to litigation. I was just referring to the spouse who was not happy with where things were going.
Oh, okay.
Certainly, it could have been a spouse. It can be a spouse in mediation or collaborative divorce. I haven't had a litigation case in many, many years. I've been all mediation and collaborative for the last
Steve,
at least 10
you're
years.
on the team.
Yeah, really, exactly.
Well, that's how I know you.
That's right.
From all of our collaborative and mediation networking and support groups that we have.
Certainly.
So tell me about some cases that stick out in your mind as being particularly memorable, or things that people did well and didn't do well, or what, some of your experiences working in this field.
Let me say, yes, I will give you some examples. I have done business valuations for the corner delicatessen and $200 million companies, and just about everything in between when you've done it this long. And so one memorable case was a celebrity who was getting divorced, and her husband owned the family business, if you will. It was a $200 million fulfillment business, okay? And almost everybody knows what a general ledger is. I mean, it's the books of entry of the transactions of a business. His CFO was telling me, we don't keep a general ledger. Okay, so that seemed a little odd. When push finally came to shove a couple of months later, one of my staff people discovered one page of a general ledger that they had not been able to hide from us. And so that gave us the knowledge that there was that they had books. So we finally got
would that alone have raised a red flag for you, that there isn't a general ledger, because that's so far out of the normal?
So far, yes.
Yeah.
The fact that they just said there's no general ledger.
Right.
And then when we found one page behind a metal file cabinet, that started all the antenna, vibrating. What we discovered was that the husband, if you will, who owned the company, was living his entire life through the company, all his personal expenses, his trips, just everything, hundreds of thousands of dollars per year. And so the non-property spouse, the wife in this case, ended up with $12 million that he was trying to withhold from her for a long time.
Wow.
So that was one memorable case. I've had another case where I was the property spouse owned a restaurant, and I'll have to say husband and wife. It doesn't jeopardize anything.
We'll make a disclaimer that when we say husband and wife, we mean spouses, and
Exactly.
It could be a husband and a husband, or a wife and a wife, or a wife and a non-gendered identity. And we want to include all of those people, but just for ease of discussion.
Right. And I've had all those combinations.
Right.
So the fact is, in this case, the husband owned a restaurant, okay? The bookkeeper of the restaurant was murdered, okay? After we got hired to do the appraisal of the restaurant.
Oh, no.
Yes.
Did that make you withdraw from the case?
No, I didn't have to withdraw from the case. I'll tell you why. You're asked for interesting cases. I'll give you this one and two more, perhaps, if we have time. But anyway, the bookkeeper was actually murdered. They reported it as a holdup attempt on the restaurant. Okay, it wasn't up to me to decide who did it,
Right.
or why. But obviously, it made my work much more challenging because I didn't have a bookkeeper to ask questions of. Okay, so I had a new staff person helping me on a particular day. Okay, and yes, they had a general ledger. They had a complete set of books, if you will. But restaurants back in the day had sometimes a second set of books. And so, of course, he denied the second set of books, the off the books payroll, the unreported sales. And my new staff person discovered, again, it was one page of the second set of books. And while we could not get anything else, we actually reconstructed the entire operation for 2 years from that one page.
Wow.
It had
Because you
payroll
were
and
able to
purchase.
compare the one page with the other book and figure out what they were doing?
We did that, and we also had industry statistics, which we utilized,
Hmm.
and we were able to do it. And surely they settled the case, and all was well. But I never found out who got convicted of the murder of the bookkeeper. But
It's like you're a detective.
there must have been.
Yeah.
We're financial detectives, as you can
Right.
tell,
Right.
but that sometimes I've been, because we find clues and we get to the truth.
I had a case some years ago with a restaurant, owners of a restaurant, and they had started the restaurant together, but they did everything in cash. They paid their kids' private school in cash. They paid all their suppliers, the fish, the meats, the vegetables. They bought, supplies in cash. They paid the wait staff in cash, the cooks in cash. And it was almost Shakespearean, the effect of having these piles of cash around. They had a safe, buried under the floorboards in their attic
Hmm.
where they kept a lot of cash. And it was really an extraordinary case to see. And they couldn't agree on how much the restaurant earned, how much the restaurant spent, how much the restaurant netted. It was just a mess.
They were never able to agree. I mean, they didn't settle.
They didn't settle. They ended up going to litigation. And I thought that case, of all cases, had so much motivation not to go to court and
Hmm.
air all this stuff. I mean, they must be still embroiled with the IRS, I would think, for all the undeclared cash.
It's surprising because the judges in litigation cases, when I was doing litigation cases, when they see cash exists and not get reported, they're ready to pick up the phone and call the Internal Revenue Service.
Yeah.
So it's very interesting. Yes, I've seen those. Yep. I have a current case which is quite interesting. The wife, before marrying her second husband, sold the family business for $30 million, and certainly as a result was quite well off financially. Um, and then she married her second husband, and about 10 years after their marriage, she became very ill, developed Parkinson's, could not write, could hardly speak at all. And yes, she had a joint bank account with her second husband. And after she could not communicate well, she could not sign checks. And she was the matriarch of the family back when. And I'll just say around 2021, he started forging her signature and diverting millions of dollars to himself and his two boys from a previous marriage and a grandson of one of those boys. And so I'm in the process right now of discovering the $8 to $10 million of misappropriation. But what was interesting is the husband, if you will, who did all this, suffered a stroke in March of 2023, and he died a few months later. So
Oh, my.
he committed all these horrible financial misappropriations and then died. And so my job with my staff is to discover basically everything that happened, okay, and report it to the wife's lawyer. It's not litigation. They're hoping that it will be settled. It's not. they didn't formally create a collaborative divorce team, but they're hoping to make it like that.
They're working collaboratively
It's just
somehow. Yeah.
so interesting.
So this is interesting. So the stepsons have been enriched
Yes,
by basically their stepmother's what should have been their stepmother's money,
that is right.
and they're willingly sharing the information about the gifts they had received from their father.
Well, the wife's lawyer subpoenaed the banks, and I am at this time going through a tremendous amount of checks, canceled checks, to determine who did what. And you could just see that the husband had a signature stamp of his wife's signature, and I'm going through about I say 1,000 checks or more to determine, with the help of staff, to determine what were normal paid bills, because he paid the household bills when the wife couldn't sign the checks anymore, and what were diversions to family members. And he purchased over 100 gift cards for his family and friends, and so we're getting to the bottom of that. And it's just
Yeah, gift card seems to be a way that people hide assets these days. I don't know what it is. I mean, I've heard of them, I guess, fraud. That's, the phishing frauds where we get these phone calls saying, oh, this is Chase. We've had a hack and you just have to transfer your account now to this other account number. And people go, no, of course. Here's my bank information. And then they lose all their money. And then the people who are behind the frauds seem to put money in gift cards very quickly. It's like, I guess that's a non-traceable way to hide. I don't know.
yeah, yeah. And I've been contacted in non-divorce situations to try to help people find those bad guys and gals who are doing that. And so we are in touch with the FBI on occasion
Wow.
to help them trace the sources of the communication.
And I heard that recently there's been like the new thing that they're doing is just sending out like exploratory texts or emails and just saying, "Hi, are you the ballet school on Monroe Street, or are you the vet on Smith Street?" And people say, "I'm not a vet, but I have a lot of pets. Who are you?" And they start a conversation
Right.
like they're just trying to be friendly,
Mhm.
and then suddenly this new person who they've been chatting with for 2 months and has a good sense of humor, and they feel like, oh, it's my new friend, and they have a big cryptocurrency deal where they're going to get you, Bitcoin, and it's going to be really cheap, and then you're going to become a millionaire. So people have to be very cautious about who they're communicating with.
Some of those fraudsters are very intelligent and skilled and believable, you know. But
Right. They know how to turn on the charm. And they also look at people's social media profiles
mhm,
and figure out what are their interests. It's kind of
yeah,
insidious.
I received an email from a lawyer who was dead for 5 years,
Oh,
um, and I that was an easy one. I knew him very well.
oh.
We had worked together, but gosh, it's really something.
How would you describe your attitude and your approach to work when you're working with a family where the spouses are divorcing and they each feel injured? And I know you work in the collaborative process where you have to be neutral. And how do you handle that?
That's a great question. Certainly, I'm impartial always, whether it was litigation and whoever hired me, whether I was court appointed by a judge or one attorney or jointly by both attorneys in litigation. Certainly, mediation and collaborative divorce, where I am the financial neutral. And the answer is the work I do is almost identical under each venue. All I'm trying to do is to discover the facts and prove them. And so in mediation and collaborative divorce, it gets a little challenging at times because if one spouse is misappropriating assets or not reporting all the income to the detriment of the other spouse, here I am being neutral and I need to discover the facts. and help them settle the case. So I just, certainly at the outset, I convinced them I am neutral. Okay, our engagement letter certainly discloses that. And then when you start to get into the haystack and find and look for things that could implicate one spouse, and sometimes the spouses are each misappropriating from one another, not always to the same extent. But the fact is, I have often needed to reiterate, this is where we're headed. You know, I'm impartial, but we need to get down to this and move on. Okay. I love my work. It's just something like we've already discussed, has started a long time ago. And, it's just, we are really helping people. We're helping both spouses get on with their lives. An amazing thing that I learned quite a while ago, years ago, is that the spouse who's misappropriating and not reporting properly to the other spouse, you may not believe this, they want to get caught. They want to be discovered. They want to they want to get on with their lives. And so I know that, and I approach it from that sense. And I've had spouses open up their desk drawer and hand me a spreadsheet of the misappropriation. It's just, it's very interesting. I am, without a psychology degree, we're financial psychologists, and we have to use a holistic approach. We look at everything about their lives to get to the truth, the facts of the case. Very interesting.
Yeah, that is very interesting. I mean, it's interesting that somebody would open their drawer and hand you that they're keeping a list of what they siphoned off. I mean, it shows that they must have felt guilty on some level to keep track of that. And maybe it's a relief to have somebody come in and say, okay, we're not going to be able to get this done unless we have all of the facts and we know the truth of what happened, and we trace these funds going in and out and up and down, and and when there's a lot of emotion involved, it's difficult to keep track of that stuff. I know when I was the executor for my mother's estate, and my father had died a few months earlier, and it was so emotional for me. Every time I worked on it, I just felt exhausted for the rest of the day. Mm-hmm. And it was difficult for me to keep track of the assets and what I had divided, what still remained in the estate. And, I mean, because the emotion was so strong, I would just freeze up. So, it's probably really a relief for people to have someone like you involved to help them follow the money and and figure it out.
And in that particular case, by revealing to me the pattern and the misappropriation, it saved them thousands of dollars in accounting fees. I mean, they didn't have to pay me. They just showed.
Right, that's true. Right, they just showed you. They had all the records, so that that must have cut to the chase. So, do you have any tips for families? I've had a couple of families recently who it really seems like they don't earn enough to make ends meet. I mean, one couple has 4 children. I am from a family of 4 children, but I grew up a long time ago. I meet very few families with 4 children in Brooklyn, and they were making ends meet when they were all living together. But now one parent has moved out because they're separating, and rents in Brooklyn are rather high.
Sure.
So I feel like my advice to them would be to move to Wyoming, Mississippi, I don't know, somewhere cheaper, Philadelphia. But I mean, I'm not really going to tell them to move. But how would you help that family if they were when you were on a collaborative team and you're the financial neutral?
When we reach a point of they truly want to settle and they're getting ready to settle, I very often am asked, how are we going to make this happen? Because we just don't have the funds do what we want to do, And it's interesting that you mentioned moving to Wyoming, even though it might have been tongue in cheek, but I had one case where the property spouse who had to pay an arm and a leg to the non-property spouse, all for good reason, okay, moved to Arkansas and lived in a house that that they paid, $140,000 for. This goes back a few years, 140,000. But on Long Island, it was easily a $600,000 home, and they had 5 acres, lived on 5 acres with a pond, a beautiful pond, and that actually occurred. There was a move to Arkansas.
Wow.
I don't recommend it in every case because it's just not going to happen. There are children involved. You want to keep close to the kids. So I revisit the budgets and I say, well, here are your budgets. How can we help you get on with your life without severely restricting your lifestyle? And, we get creative. It's they're don't do this every week. Don't do this every month. Travel, consider other travel plans. I'm not saying don't travel, but visit the national parks instead of the art museums of Italy. Take up hiking. I mean, there are so many alternatives that just don't.
Hiking instead of skiing.
Yeah, and so we try to find. By the time we get to that point in discussion, I already know an awful lot about them and the kids if there are kids, and so you can make actionable suggestions that sometimes they say, "What are you, ridiculous?" But very often they'll say, "Gee, we didn't think of that." So it works out. We're creative, and I have a small staff. We're a boutique forensic accounting firm, if you will, but my staff is intelligent and creative. I've had them quite a while, and they're starting to think the way I do. And I'm not saying I'm right all the time, but we come up with good things, with creative things.
You've hypnotized them, indoctrinated them.
Well,
Yeah. Well, I mean, that makes a lot of sense. It always seems to me it's increase income or decrease spending. And that's what it comes down to. It's not really, I don't know what other options there are, but
a lot of people think that increasing income is more difficult than decreasing spending. They feel they don't have as much control over increasing income. But I have recommended on occasion an expert who helps to determine what a particular spouse is suited for in terms of, a new career, and that has worked out on occasion, earning that person an extra 50 or 60,000 a year. Case closed, problem solved, and so that happens too.
Yeah, and then I have another couple who have very little saved for retirement. They're in their 50s. They both were in the arts for many years and have no pension assets to speak of. They are now working at jobs with good benefits, but they came to them rather late, and they do have a house. So they're planning to sell the house and put aside $200,000 for their child's college expenses. They have one child. And I had read somewhere that that's not really advisable to do. What are your thoughts on that?
The first thing that comes to mind to me is to ask the question, is one of them over the age of 62?
No.
Okay, so how young are they? Were they back then?
They're maybe 57, 58. I mean, they're not that far from 62, but...
Right. So the reason I asked is because once you're 62, you can qualify perhaps for a reverse mortgage. And I've seen people obtain reverse mortgages where they don't have to make mortgage payments anymore. Okay, $2,000, $3,000, $4,000 a month, and of course the equity in the home may decrease because they're not making mortgage payments, but it frees up the cash flow for that particular couple or one spouse after they're divorced significantly. So if that particular couple in their late 50s, we could get them to hold on for a while, okay, then a reverse mortgage may be possible moving forward. Perhaps they could refinance one, or if they're finally divorced and they need two residences, they could refinance one of the homes and then in 4 or 5 years get the reverse mortgage. So they're basically using other people's money to survive, making monthly mortgage payments, which is not always advisable, but it's getting them to get someplace eventually. So that's one thing to think about. Reverse mortgages work for some people.
Yeah, that's interesting. I guess I've had a negative impression of reverse mortgages because people are basically losing all their equity.
That's right.
And they have nothing to leave their children. In fact, I have a friend whose mother got a reverse mortgage and she didn't know that her mother had done that. And she,
Oh,
then her mother is still alive, but she's going to get nothing when her mother passes away.
yeah.
That was a bitter pill for her too.
Yes. But unfortunately, the parents need to deal with their life first. And so I have counseled families, up to 4 generations of families in one family, we set up a family council and determined how to deal with the income and assets of everybody. In particular, in one case, there was a family-owned business, and 2 of the 5 children were working in the business, and it was my mandate to help them, let's just call it, equalize the financial picture for everybody so that the ones in the company who would eventually inherit the business were no better off than the ones who were not in the company and would not inherit the business. Everybody loved one another, so they wanted the kids to be treated equally. And so, we had family council meetings and we established ground rules and how to keep the family going for 4 generations. There were great grandchildren involved.
Wow.
And it was just interesting how, they were setting up 529 plans and just really trying to keep everything going for everybody.
Yeah, I mean, that's so nice when the family members all get along and can be on the same page and are trying to, do the right thing and be transparent and have fairness. I think you probably don't see that in every family.
For sure. For sure. Yeah.
Yeah. But that's nice when you can see that. I guess one thing I heard was that it's better for the parents to provide for themselves with their retirement assets rather than the college payments, because the parents, as I said, have very few assets, and this house is kind of it. And if they give their son, so much of the proceeds from the sale, they might find themselves penniless.
Yeah.
When the son will end up having to take over caring for them in their old age, and that's more of a burden than paying off student loans. But who can say?
There's a bumper sticker from a long time ago, 25 years ago perhaps, I saw in a car, and it said, "We are spending our children's inheritance," because they were living their life, and the
Right.
children will just have to fend for themselves.
Yeah. Well, Steve, you see a different level of this field than I do. You're looking at different aspects of the same families. It's very interesting to talk to you. You have such a wealth of knowledge. It's been a pleasure. And what would you say are maybe some of the takeaways that you would want people to have after our conversation?
Well, the takeaways for attorneys, I would say, are that they need not deny that even in mediation and collaborative divorce situations, one or both spouses may not be honest. And they need to realize, especially in the last 10 years, I've noticed this trend in 10 years, that the spouses are not necessarily as honest as they once were in terms of other bank accounts and other real estate that the other one doesn't know about. And there are some lawyers, maybe just a few at this point, who are unwilling to accept the fact that this goes on. And we just want to settle. We just want to settle. And certainly among the collaborative divorce team attorneys, they're nice folks. Everybody is very nice and nurturing, okay? And yet we need to see the facts that something is going on, and we need to allow the financial neutral to do their work, because we're not all we want to do is allow these spouses to get on with their lives, and the best way that that will occur is if we really show them what's going on. So
So
that's the
trust but verify.
trust but verify. Sure.
Right.
And my advice to spouses is, if you have children, think about that every day,
Mm,
because your decisions need to be made based on the fact that you have children. And even though you're getting divorced, you're going to have to work with each other for many, many years, if not forever, because there'll be grandchildren too.
right.
It's, in my own situation, I was divorced decades ago. My two boys were young, and there was a point where they had, I don't know, I think they had everybody, my wife, ex-wife, and I remarried. I think they had 8 grandparents.
Wow.
So everybody was there, and we needed to celebrate holidays together, and it was interesting. So my advice is, be as amicable as possible, especially for the children.
Yeah, that's so interesting because you think that you're divorcing somebody, but when you have children, you're always in each other's lives.
Yeah.
Yeah,
And even if you have no children, kindness goes a long way in the rest of your life.
that's so true. You never regret acts that you did that were kind.
That's right.
That's a good point.
Yeah.
Well, thanks. That's a great note for us to end on. Thank you so much for taking the time to join us this morning to keep the kids in mind. So
Thank you very much. Thank you,
thanks
Rachel.
so much.
So long.